Chapter 3: Small residential properties with big opportunities. This is the pros and cons of starting with single family and duplex homes. Lesson 1: Single family homes are the gateway investment for nearly every investor. Why beginners love single family homes: the low entry costs, the easy financing, etc. We're going to go over long term appreciation versus cash flow. We're going to talk about real world examples and pitfalls to avoid. All right, so if you're new to real estate investing and you're wondering where to start, look no further than single family homes. Start small and start smart. By that I mean, if you're going to buy a property, make sure that your numbers are run on the front end, not on the exit. Because here's the deal: you don't need a 100-unit building to be successful to win on your first deal. You just need to not screw up on your first one. Number one, this is why single family homes work for beginners. 3 easy words: low barrier entry. That's it. Banks love them. You love them. Agents love them. Everybody understands residential real estate. I guarantee you, you live in a home of some kind. If it's an apartment complex, a duplex, a single family home, everyone lives in them and they're easy to understand. You can get a 30-year fixed rate mortgage with 3 to 5, maybe 10% down, and you know that it's going to be that payment for those years. Try doing that with a shopping mall. They're on what's called a 5-year ARM commercial loan, typically over 25-year periods. Every 5 years, that interest rate resets. So, if your credit is halfway decent and you're not trying to buy a castle, well, then you're in. Number 2, appreciation versus cash flow. Let's break this down. Appreciation is the property value going up over time. Now, cash flow is the amount of monthly money left over after your expenses are paid out. And by the way, make sure that your expenses include maintenance, repairs, and capital expenses for the future. Single family homes tend to appreciate more than they cash flow. You have a low amount of cash flow, but high appreciation over time. That's traditionally what we've seen in the markets. So if you're buying in a hot market, great. You might double your equity in 5, 10 years. But monthly cash flow, don't expect $2,000 a month from one single family unit. Best case scenario, you might make a few $100 a month. But if you're building equity in the long term, buy some single family assets, because real estate is not a get rich quick scheme. It is a get rich slow game, and you can get into it with a very low barrier of entry. Number 3, here's some pitfalls to avoid, or you're going to learn the hard way. Let me be real with you: single family homes are simple, but simple doesn't mean easy. Here's where beginners mess up. They usually overestimate the rent. They think that because one Zillow listing said that they can get $5,000 a month, they can too. Well, not necessarily, because they put the high end finishes in, and they're still listed for some reason, almost like no one's rented it yet. So you have to have realistic expectations. There's tools you can use like rentometer.com. There's other tools like airdna.com. They will give you free information about what rental rates you can expect in an area. But don't use those alone. Look at comps. Ask realtors. Really get a feel for the area. Call local listings and make sure that they're asking what you think you can ask for in the area, and then allow for some variance. Some people forget repairs. You see, the AC breaks over time. That's on you. The water heater that died, that's also on you. You're paying for it. So don't forget to factor in maintenance and repairs. The vacancy. That's a big one that most newbies forget. Allow a vacancy for about 2 months for each tenant. If they're gone for those 2 months while you're trying to fix it up and lease it out, that's money not coming into your pockets. You need to account for on your NOI, your net operating income. If you want single family homes to work, then you got to think long term. Think about a solid neighborhood. Think about a stable tenant. Think about holding it for a 5 to 10-year minimum term. You won't get rich fast, but you will get rich for sure if you don't quit and you buy right on the front. You see, your first property isn't about profit, it's about proof. Proving yourself that you can buy it. Manage it, proving to yourself that you don't just lose your shirt on the first one. Do that once, and you're in the game forever. It's addicting, and you'll realize how good you can get at it after just a few swings at the bat. You don't need to start big, you need to start small. And if you're looking for steady returns with an asset class that you can really understand and grasp, well, invest in a single family home. This is where we thrive. We put your capital into well vetted deals in high performing properties. Sometimes it's single family, sometimes it's commercial assets. And we syndicate that money together as an investment team together. Now, if you're going to do this alone, run your numbers, but start small. And you've got this.